First of all, I want to thank the organizers of this event for having it in the afternoon. I don't like getting up at 7 o'clock in the morning, jumping up here and speaking to anybody. I'm not awake, so thanks for letting me sleep in. Second of all, this guy, Steve Brown, with all the experience, has actually lived through four recessions since the 1970s. And what did he learn from all that? Well, I'll share that with you in a minute. All right, we're going to give you the crash course on commercial real estate today. Starting off with statistics, which remarkably are going to look a lot like the ones that you've already seen. Give you some pretty pictures about some of the investment sales that have gone down and some prices affiliated with that. Development, the D word in Santa Barbara, development. Yes, it's taking place, as you've seen around town, mainly concentrated in apartments and hospitality. Then we're going to kind of finish up and wrap up with retail and cover a little bit of State Street because everybody's been talking about that. So here we go. What a surprise. Does this graph look anything like the other ones that you've seen so far? Now, the only difference is after looking at Gene and Dan's graphs is that we were running about a year late. Because as you can see from the early 2000s, we were averaging about 75, 85 sales a year for commercial properties. And commercial properties are defined as industrial, retail, office buildings, land, everything except for apartments. And then we saw 2009, and wow, what a drop, 35 sales that year. Then we started to climb back out, and again, looks very similar, eerily similar to the residential sales. And we peaked out at 2014 with 103 sales, and then we've started to level off. Now, 2018 was a bit of an anomaly, and I think that is attributed to the disaster that hit Montecito. We saw a lot of our clients affected by that. Also, Ventura has an impact on our group, and Ventura lost 1,000 homes, so I think that number's a little skewed, but I think the gist of the story here is that we're starting to level off and see some calm in the rise that's gone on for the last several years. The next slide shows you a comparison for the last 2 years from 17 and 18. 97 sales in 17, 81 and 18, a 17% drop. Sales volume, dollar numbers, 329 million versus 279 million, again, about a 15% drop. So that's telling us that we are having an impact, the market is having an impact on what our sales numbers are as well as our sales volumes are. Though I have to tell you, if you divide 81 into 279, we had bigger sales in 2018. Don't know what was going on, just happens sometimes. All right, pretty pictures. Let's talk about some of the more notable sales that took place, not necessarily the biggest sales, but 18 Anacapa is a 3-story Wright building that's down by the beach. We've all driven by it for years, and in my entire career, this is the first time I've seen it sell. Sold for a little over $650 a square foot, and it's bought by an owner-user. Even though it's a local investor, it's a guy who's going to move his office space in there and occupy some of the residential component to that. So that was a high-profile sale, as was 1101 Coast Village Road. All of you have driven by this 1,000 times, changed hands 3 times in the last 6 years, now the home of Compass Realty. And this was bought by an investor. This was part of an exchange. And the price per square foot, please note, was almost $1,500 a square foot. Now, to give you some comparison, downtown Santa Barbara in the corridor, and I'm going to generalize, you're going to pay somewhere between $400 and $600 a square foot. So Montecito and Coast Village Road commands a premium, and this property did too. Sold to an exchange buyer who ironically sold the corner of State and La Cumbre, the old Galleria, which is now going to be a Target. I hear you cheering back there. Cottage Hospital area, medical buildings. Everybody that's been in that area has seen this wooden glass building. This building also sold 3 times in the last 5 years for a whole variety of reasons. Sold this time to a local investor, part of an exchange. The little number you see in there, cap rate, is basically the return on investment for that sale. Again, price per square foot, a little over $800 a square foot. You see differences in prices depending on where you are in town, but that's kind of establishing the mark for the Cottage Hospital and medical. Let's move over to development, the D word. Well, most of what you're seeing right now is part of the average unit density program that the city has implemented. And as Gene flashed up, the mark is one of those, and we'll see a picture of that in a minute here. But all those little dots on your screen, all those little dots on that map, are projects that are in queue with the city of Santa Barbara. Some of them are applications, some of them have been approved, some of them have been constructed and occupied. There's about 185 units in that category. But that gives you some idea of how popular this program was. It didn't do exactly what the city wanted to do. This was designed to create workforce housing downtown. But what it did do was just as positive, as it created more apartment inventory in our town, which will never meet the demand for apartments here. The graph on the right shows you those numbers. And again, 872 are all the applications in all various stages of it. We probably won't see half of those built, just for your information. Part of that reason will be due to the fact that construction costs have gone up somewhere in the neighborhood of 25 to 30% just in the last 18 months. Some of that tied to Montecito, some of that tied to Ventura. It's all gone up dramatically, so we won't see all those units come to life. Here's the mark, 89 units on Upper State Street. Everybody has seen this, for better, for worse. It got built as the first AUD project and recently sold, that corner sold, excuse me, I'm moving ahead here. That actually sold to a group of investors here recently, and I was watching Gene's slides about condo sales, sold for over $600,000 per unit for an apartment building. So you saw some of the numbers for condo sales. That gives you some idea of the premium value of apartments in our town and the scarcity. More development. Now, everybody's seen this. The Rosewood is just opening up at the end of the month. That's probably one of the biggest and most visible developments that have taken place now in the county. And the Hotel Californian, yes, it's old news, but I can't overemphasize the fact that that had a tremendous impact on Lower State Street and improving the entire environment down there. And will be the anchor for State Street and State Street retail. Development, who would have thunk? Sears, well, Sears is going out. Target is now going in the Galleria and out in the Kmart in Goleta. And so they don't need the Sears space anymore, which was everybody's bet. So the owners of the Sears land, because everything's on a land lease there, have put that property on the market, soliciting offers, and the most likely candidates will be looking at developing some sort of mixed use there, combination retail and residential units. And have built out to a maximum, hold on to your seat, you could put 572 units on that site. Come on, we all know that's not going to happen, so. All right, let's go back downtown. The Saks building, everybody's favorite building. Well, this was bought recently by a local developer who is the gentleman who developed the Hotel Californian. And he was going to follow the city's lead to do mixed use, build residential upstairs, retail downstairs. Well, to his fortune, somebody came along, the biggest retailer in the world. I can't tell you the name, but it starts with an A. They bought a local company, and they're going to move their headquarters into this building. So they signed a 10-year lease to move into the Saks building. Interesting change. I think that's good to bring more bodies downtown and create more vibrancy down to State Street area. Macy's, what's going to happen with Macy's? Well, I don't know, you tell me, because a lot of ideas have been kicked around. This changed hands also last year, but it wasn't an arm's length transaction. It sold to the owners of Paseo Nuevo. Some of the ideas that have been kicked around have been movie theaters, restaurants, again, residential component, office component on the second and third floors. The problem with that building is that you don't have any windows in the second and third floors. And it's going to be a really tough building to convert. So nobody's really picked a horse yet. Hotels have been mentioned, but nobody's really decided what that's best suited for. Target, the one I was just talking about earlier. This is the corner of State and La Cumbre. That's coming to town. If you've driven by, they're moving like gangbusters, building that out. Target sold. I showed you the picture of 1101. That was part of an exchange when this property sold for somewhere around $11 or $12 million a year ago. It just sold to a group of investors with the Target lease intact for $27 million. So you would have been like to be the guy who put that all together. Anyhow, that's about $800 a square foot. Again, a real milestone for State Street real estate. All right, let's talk a little bit about downtown retail. First of all, the city did a study, or the downtown organization commissioned a study in 2017 to determine what we could do to revitalize downtown. And they came up with a number of suggestions. Many of them are obvious to you. You see the first one there, get a handle on loitering. That's had a huge impact on not only the locals, but our visitors as well. Encourage mixed-use residential. That will bring people that live down there and take up some of the space. What you realize but don't think about it is that we've got a 5-mile retail strip of State Street that runs from the beach up to 5 Points. And that's a lot of retail for our little town. We need to break that up. And residential will add more bodies down there. Quite frankly, I think 1 and 2 will have a good impact on each other in that if you've ever dealt with a homeowners association, they're very vocal. And I'll bet they have something to do with any of the loiterers on their street after hours. So that may zero itself out. Also, encourage landlords. There were many suggestions, but one of them that I thought was good, encourage landlords to get more involved in their tenant success. I mean, after all, the tenant's going to be paying rent, and that encourages them to be able to have a successful building and a successful business, whether that's adjusting their rents, whether that's contributing to their tenant improvements, or helping them with their marketing. There just needs to be more proactivity with property owners. All right, how do I summarize all this up? Well, is it a buyer's market? Not exactly. I think buyers and sellers are starting to see more and more eye to eye, though. I think we're leveling out. We're seeing more properties sit on the market longer, and we're seeing more price reductions. So I think, as we heard from our other two speakers, that we're going to see a leveling out and a little bit of a softening up at the marketplace. Rising rates will impact cap rates. Well, sure. If the cost of borrowing money gets more expensive, you got to get a better return on your building. And the only adjustable factor in that formula is the price. So we're going to see prices either come down a little bit or certainly stabilize rather than take off. Less development. As I said, the cost of construction is almost prohibitive now. And that coupled with a bump in interest rates, not a huge one, but a percentage point in the last year and a half, has given developers pause. So we won't see rampant development. Don't worry about that. The one caveat here is that prime properties, well-located properties that haven't come on the market for years, much like that Wright building that I pointed out earlier, those are always going to go at a premium. There's no gauge for that. There's a lot of cash on the sidelines always, and if something comes up that investors want for a legacy property, they're going to pay for it. And the market adjusting to a new norm. I think that's great. You know, the highs are fun, the lows aren't so fun. I think if we level out and as brokers, we can talk to our buyers and sellers and get them on the same page, I think that's a lot more fun. So what did this guy learn? By the way, Dan didn't like me slipping in this slide here, so you'll see his picture next year. But what did this guy learn on all these recessions? Well, what he learned is, from 1974, is that we're not immune to recessions. Property values get hit, and we adjust. But in each and every case, commercial properties have come back strong, and they've come back to hit or exceed previous values. So moving forward, if you buy commercial real estate, buy it for the long haul, and you'll be fine. Thanks for your attention.